Welcome to the first ever episode of the Alts Hot Seat. I am your host, Chris Myers, and I'm so excited to be here with you today. The markets are as frothy and dynamic as ever, and with that comes opportunity. Joining me today is Zak Boca. He is the founder of the AltExchange, also known as AltX. Zak is a serial entrepreneur, investor, and thought leader in the alternative investment space. Zak, welcome.
Thanks, Chris. Appreciate it.
Tell
Um,
us a little bit about your background.
well, I'm excited for the podcast, as you know, our YouTube series here. What I find most interesting in alts is all of the different opportunities, and so what we're doing, what you're doing with interviewing different asset managers and hearing different strategies, I think will be great. But I've been an entrepreneur for most of my life. My first company was an advertising business. An online advertising business, and I was just fortunate to come up with the time that I did when you could be in middle school and start a business. Um, and so I like to say that the first business that really worked was a company called Midphase, and it's a shared hosting business. Many of us know companies like GoDaddy and know that in order to have a website, you need to have a web hosting provider. So Midphase did just that. We built a lot of automation to make it easy for these small businesses to deploy websites, build websites, and I've kind of carried that theme through a lot of what I do. My next business, Single Hop. What we did at Single Hop, we were a managed cloud provider, and we took a lot of these services that and technologies that were available really far up market. We brought them down to kind of the mid market and smaller businesses into an OpEx model, and we allowed customers to deploy infrastructure across all of our data centers in North America and in Europe. We sold Single Hop in 2018, and really had a nice run there. But I guess my investor life really began in 2008, at an interesting time to sell a business, have some capital, and go, well, gosh, what do I do with this? Where do I deploy it? I was awfully lucky in that kind of I was a concerned investor. I think that's just sort of my nature. And so I sat back and I said, I'll take time to see what the world looks like and what kind of piques my interest. And the what I learned in 2008 and 2009 was that the 60/40 allocation wasn't for me. I think a lot of people kind of followed that traditional asset allocation model, and had a lot of challenges, right?
Hmm.
Um, so I really became interested in alternatives, began making investments in startups and in private equity funds, and so I've now been doing that for 15 years, which leads me to what we're talking about, AltExchange, right? Um,
So,
it-
I think, yeah, I think a lot of us are aware of, dabbling in maybe startup investment,
yeah.
early seed stage type things, maybe a little bit of real estate investing. But how do you define alts? It's something that, it's such a big topic. It's something that, I think means so many different things to different people. When you say alts, what does that mean to you?
Well, I think specifically when I say alts, I'm looking outside of a traditional financial product, right? I'm looking outside of public equities and outside of generally muni bonds.
Mhm.
And so that leads you. I think what Chris was probably more, maybe more important is, what are you looking to accomplish by going outside of equities or munis? Generally, it's that you're looking for an uncorrelated investment. You're looking, if you think about 2008, we very difficult to get yield, just like it is today.
Mm.
And so on 40% of your portfolio in a traditional allocation, you're kind of getting a zero. And so naturally you go, well, what else out there in the world is there for me? Um, And that's often things like, you know, private equity funds, maybe a direct fixed income replacement is a lending fund. Um, right now, you might be getting a 0 on munis, but you could get maybe a 10 or 12 or a 13 on mid-market, in a mid-market lending fund.
Mhm.
So that's kind of how I think about it. My goal as an investor, I love equities. I'm allocated to traditional, products, right? Equities and munis, and but I look to have a part of my portfolio that is just uncorrelated to those. And through periods like now, when you have instability and question around how rational the market is and low yield, that's when you're kind of looking out at startup investing, private equity, other ways to get yield and appreciation.
Yeah, I mean, it's a fascinating time, and as we're recording this, we're in the middle of May of 2021, and knock on wood, we're coming out of the great COVID pandemic. There's it seems like a little bit less political instability, but there's still a ton of uncertainty, right? We don't know what the future holds. The market is, uh, let's just say, maybe a little irrational, generally speaking, across the board. Why should someone, maybe your average high net worth investor, start looking at alts now if they haven't already been exposed to it? Why alts now, and also what inspired you to create AltExchange today?
Yeah, sure. So a couple of things. If the traditional allocation model 60/40 was doing its job, right? If you if we weren't having to stimulate the economy with low interest rates, then everyone may be getting a 6 or an 8 or a 10 on their muni portfolio. But because the reality, I mean, as you know, is that that's not happening.
Mhm.
And so you could have 40% of your portfolio. Let's just kind of say you're traditionally allocated to the 60/40. So you could have 40% of your portfolio that's getting nothing. And then you could have 60% of your portfolio in equities, which again, they certainly have a place, a heavy place in your portfolio. But 60% of your portfolio could be experience a lot of volatility. So in my case, in 2008, in somewhat similar times, I didn't want the volatility, in public markets at 60%. Um, I like to sleep well. I like less volatility in a part of my portfolio. So many other people thought the same in 2008. Alts as an asset class doubled in size, and I think that just goes to show that investors thought, this is a time when I'm seeing opportunity to generate yield in a way that is more stable. And so that's what really had me inspired and interested in alts. I also find them to be very interesting. Like I enjoy as an operator getting learning more about certain segments. That's why I think the podcast is going to be really great, as we're kind of highlighting new investment opportunities. Often things may be just too small to be a public, something that we see in the news. So you kind of get into these interesting little areas, which I think is cool. But AltX really was, I'm sitting there as an investor in alternatives, and I've allocated, say, to 25 different funds. But I'm in this spot where I'm not a family office. I don't have one. I don't have the resources that they, pension funds have, that large institutions have, right? When it comes to, analyzing these statements that I have come in, putting together performance reports, managing capital called, collecting, if you're in 25 funds, you probably have in the neighborhood of 150 to 200 capital calls that you'll have to meet.
Hmm.
And so the inspiration came from thinking it used to be a problem for small investors like me to find deals. That's not the issue anymore. The issue is, are as a small investor, we have to ask ourselves, are we managing this well? Do we really know how our investments are performing? Can we look out into the future and have some sense for what net cash flow may look like? Um, are we comfortable making, I was having issues making investment decisions. Um, Even when I was invested in similar assets and even, investments from the same manager, I couldn't because I wasn't, inputting all of this data into a spreadsheet every month, every quarter, I couldn't actually tell you how they were performing. So AltX is really all about just making it far easier for the alternative investor that's maybe in that 1 million to not quite family office resources to do this in a very cost effective way, fully understand and have support, the back office, understand how their investments are doing.
Yeah, no, it makes perfect sense. I mean, there are a tremendous number of investors that are in that space. And I am, as we've been talking about, in the same space as you are. Where you're not a family office, but you are making these investments, and the gap that exists in terms of the administrative side of understanding where these companies are, where these funds are, and just keeping up with the administrative burden is almost a full-time job. One of the other things we were talking about ahead of the podcast was, I think, one of the most interesting and probably the most critical economic developments of our generation. And that is the decoupling of the equity markets from the real economy. And I
Mhm.
think we saw this throughout the pandemic. And if you look at Main Street small business, which has historically been the barometer of economic health, we all know there was tremendous suffering, tremendous struggling, and real hardship that was being faced. And we all saw that, right? Meanwhile, you look at the stock market, you look at the Dow, which a lot of people have historically used as the indicator of economic health incorrectly, but
Mm.
still, it's the way people have looked at it. They're completely decoupled from each other at this point. And we could have a whole conversation about why that is. But what I'm curious about is, what do you think that means for the future of sophisticated investing, and also particularly for the future of alternative investing,
Hmm.
particularly for folks that are in the segment that we're talking about right now?
Yeah, it's a good question, and frankly, it is what drove me to alts in the first place. I remember when I was making some of these early investments in these different strategies, these different private equity funds and real estate funds. I would get on the phone with the operators, and I even met one of the builders at a job site so he could walk me through this and really help me understand, how does this get built? Who do you rent it to, for example? How do you control pricing? And as an operator, it felt very clear, something I could understand. I'd have to kind of understand the leverage pieces, but it was really simple, right?
Mhm.
Um, and and I think that there is this trend where, as I'll say, the retail revolution, right? But retail investors are tackling more, and they're taking on even, structured products, and trades. Everyone's a trader these days. People are, very easily trading options, which is all really cool, right?
Mhm.
But I think that there's something simplistic and less decoupled to your point, and and just something that you can understand, in most kind of I'd say major, alternative investments. Things like, private equity. We're going to buy, secondary shares and, in these healthy growing companies. And they just sort of make more sense. And I think that simplicity will resonate with a lot of investors. We're always kind of, if you've ever read the book by the founder of Vanguard, it's all about, I think it's the red book on, um, it's common sense investing, right? It's largely just about keeping it very simple, and that's how keeping your fees low, being invested in for a long period of time, and patient. Um, that's how a certain amount of investors will resonate with that. But a lot of people also, kind of lean more toward complexity.
Yeah, absolutely. Given all of the different segments that are vying for attention right now in the alt space,
Yeah.
what excites you the most?
So, um, there's a lot happening, right? You're right. There's just a tremendous amount happening right now. It feels like we've been really, we continue to be fortunate to live through periods of time where massive intersections of change and, these big trends can be spotted. Something I've gotten really excited about lately, which probably goes against my simplicity argument, is decentralized finance.
Mhm.
DeFi is this, it's just one of these things that you feel makes a tremendous amount of sense. Ethereum, I bought early on and have continued to kind of build my conviction, around. But Ethereum is growing. Its fees are growing at 24,000% a year. These number and they're not terrible. I think fees on the blockchain are 6 billion or so, right? These
Yeah.
aren't these aren't small numbers. Um, and I think that you have to be excited about where that goes. I also, if you can tell, a lot of what I've done has been to try to bring things that are available up market and down to kind of the smaller players. I like that. And I think that this whole, while you have to exercise caution, this whole crypto movement gives sort of hope, and it levels the playing field, regardless of geography. And really doesn't matter. You don't have to have. It used to be that you needed perfect execution. You needed a rent space and 350 Cermak in Chicago in order to get good trades. That's all changed, and so I like this leveling of the playing field that's happened.
I completely agree. I mean, especially when you look at some of the really fascinating technologies that are out there. I mean, Ethereum obviously is the big one, but there's a lot of emerging technologies that are, I think, equally as promising. Cardano,
Yeah.
is a really fascinating one. Even some lesser known like Nimic, with their
Mm.
Oasis platform and the fact that it's a browser-based node, channel system. Uh, there's a lot of utility associated with the technology. And of course, that is expressed via the tokens and the price, and all of that. Uh, I have to ask the absolute flip side of that. What do you make of Dogecoin mania? Right, something that started as a joke that has virtually no technical utility,
Yeah.
yet has had, I think, a 14,000% run this year. And uh, again, I believe it was last Saturday, Elon Musk dedicated effectively an entire hour of Saturday Night
Yeah.
Live to shilling the joke currency.
Yeah.
What's your take on that?
I love it. I'm a little salty that I didn't buy it. Um, I think I'm too practical. I mean, look, Doge is this cultural product. I'm not sure GameStop, maybe we had, but it's not a financial product. It's this cultural product, and uh, it will end in tears for many. But I also I just kind of go back to if you're in Nigeria, Venezuela, if you can buy the thing that Elon Musk is tweeting about and you can share in that opportunity, I think it's great. It's not something I would advocate for any investor to spend a lot of time on. Um, it's been interesting to follow. It's not something, probably unfortunately I'll never catch one of those because I'm too practical of an investor. But I don't know. What about you? What do you think? What do you think about it, Chris?
It's interesting. I I've gone sort of full circle on it. I mean, there's a part of me that likes the idea of sort of introducing the common man
Yeah.
to the world of crypto, and I like the idea of democratizing, um, access to a fast rising, opportunity. On the flip side, I look at it and say that I think the joke has gone too far. I think
Yeah.
Elon, you know, unless he has a plan to
Yeah. I don't know.
somehow take a massive position and have a hard fork and take over the technology and make it the Mars coin or whatever it is. I think he's taken it too far.
Yep.
And the fact that it went from, I think it was what, 0.0003 starting in January all the way to now, I think it's at 47 cents right now.
Mhm.
Uh, that's too hot, too fast,
Yeah.
right? And just for the sake of a little bit of background for our viewers, I'm also a professor in the entrepreneurship department at Arizona State. And one of the questions I got from all of my students back in February was, should I buy Dogecoin? Should I buy Dogecoin? And I said, what can you afford to lose? If you want to put $100 in, sure, great, cool. But, people were putting their tuition money into it.
Yeah.
It's scary. So I think that too much of anything is a bad thing.
Yeah.
And now it's just too hot. And I think it could be counterproductive for the entire crypto movement when it gets so hot. There's really only one place it can go. Now, I will say the wild card is maybe there is some grand plan here. Maybe there is some vision. But I will also say that there is the law of diminishing returns at play because just in the past few days, Elon Musk has tweeted that they're sending the Doge One rocket
Right.
to the moon. And then 24 hours later, he tweeted about whether or not Tesla should accept the coin as
Yeah.
payment. And if this was even a month ago, I think we would have seen a huge spike. And in fact, I think it went from 48 to 50 and then dropped right back down. So I think the joke is wearing thin. That's my
Well, gosh, I
perspective.
think if there ends up being a grand plan, if it doesn't, yes, I would agree with that. If there ends up being a grand plan, it's gone way too far.
Yeah.
This thing doesn't need to go any. I would agree. It doesn't need to go any further. And there is going to be this realization. Uh, let's put it this way. I think there's a certain amount that you could have learned as a new investor in the last 18 months. What lessons would those be? Are they good
Right.
lessons? Are they lessons that are going to be sustainable? Are they going to just really give you kind of this false bias? Boy, I'm pretty good at this.
Well, and just as a note, looking at my screen here, I just
Yeah.
have one of the big exchanges up, and currently the largest gain on Gate EO crypto exchange is called Loser Coin, and it's up 2,300% today. So, it's a get rich quick pump and dump scheme, right? At that
Yeah.
point, and there's pros and cons with everything, but I think that part, it's like I keep thinking of the old Arrested Development quote. This is why we can't have nice things, right? We
Yeah,
take it
that's
too
right.
far and it crashes. So
Well, and
that's
I think,
my take.
if you look through any real periods of, when I was frankly in middle school starting this first business, it was when we this advertising company, it was when we were advertising companies were able to successfully convince McDonald's that they need to pay $100 a CPM, for every 1,000 impressions, because that would somehow help their brand get larger. That was a good place to spend money. And so founders of companies were raising tremendous amounts of money. That's when we have all of the big parties thrown and all this lavish, big raises, and companies have no revenue at all and no business doing it. That's going to be the interesting thing with, I think it's very cool that during the pandemic we've taken, control of things, right? And in
Mhm.
many ways, I think it's very cool. But I don't know if we have any real picture. I'm not sure what the long-term damage is psychologically, but I also don't know if we have any real picture of what the economy looks like without all of this liquidity, without all this money floating around.
Absolutely. And when it comes to any kind of mania, any asset class at all, I have a personal litmus test.
Uh-huh.
And that personal litmus test is if you look at what the media is saying, you look at what other investors are saying, you look at tweets, do this. Replace whatever the asset name is with Beanie Babies.
Okay.
And if the word be and if you look at it and you go, that's ridiculous, when it says, oh, I'm investing in Beanie Babies will never go down,
Yep.
then you know you're in a bubble.
Yeah.
All right. That's my litmus test. And that's what Doge is to me personally right now. But I but only so much.
I like it.
Well, getting off Doge for a moment, one of the things that is interesting, and I think it all ties into whether it's the rise of Charles Schwab or even some of the more populist movements right now, like you know GameStop or even crypto. The past 30 years of finance, I think, has really been defined by this trend and normalization of the everyman investing, right? The normalization of retail investing. And I think that by and large, that's been a good thing. But what do you think the trend of the next 30 years will be? How will, particularly Americans' relationship with investing continue to evolve?
Yeah. Well, gosh, as we've learned in the last year, 30, with how much has changed, it's difficult to kind of think out, right? But I was reading this analysis of what the economy looks like, and it's almost like we're all potentially investors. We're all, where does the work get done? I don't know, but we're all managing kind of different assets or making investments in different areas. So I think I have to just think it continues. It's all becoming so much easier. Partly due to I would say fintech. I mean, fintech
Mhm.
is massive, and that new, rising segment where you can download Robinhood and make trades, unfortunately on margin, at times make, kind of simplify these, what used to be complex option trading strategies. And have, maybe not a Robinhood, but you can have reasonable execution through some of these platforms. And then you can have a good friend that owns a big technical analysis SaaS business where you can analyze, all of these different charts and different theories and see how they play out. And so fintech is really driving a heck of a lot of this, and I believe that this path we're on will accelerate and continue. And I think regulation has kind of done its job in terms of the alt space. It used to be that to invest in alts, you have to be a qualified investor, have to have a certain, net worth. Now it's really been loosened up, and I think, in good ways. So I think everything supports this idea. There's been success. I think we'll really learn some lessons when things do slow down and see a kind of how that's when I think you really learn lessons that stick with you, right? Um,
Absolutely.
but I'm a big believer in the thought that we all continue to have kind of different investments and that fintech and technology is going to really enable that.
Yeah, I mean, fintech and the behavioral trends that drive, the macro trends,
Hmm.
are really influenced by the unstoppable evolutions, right? Culturally. And there's two things that we know for a fact are going to happen. And that's a big statement given that, you know, trying to predict the future 30 years out is a near impossible
Yeah.
task. But there's two things I am confident of, and I think you would agree. Number one, there's going to be ever increasing access to information, right?
Mhm.
Both in terms of depth and speed. We know that that is always going to be a trend moving forward. And number two is the democratization of, access of being able to trade, right? Being able to transact. If we think back to the 60s, right, how hard was it to trade a stock? It was
Mhm.
very difficult to trade a stock.
Sure.
Now, my 10-year-old is, I found out he downloaded Robinhood on his iPad and was asking me if he could start trading. And I was like, no, you can't. But, but I mean, that's the world we live in.
Yeah.
So if you think about ever, ever expanding information and ever expanding access,
Yeah.
that is the driver that changes everything. I mean, even think about the last time you bought a car compared to when your dad bought a car, right? It
Mhm.
used to be you would go in and it was this big negotiation and you didn't know what the dealership paid for the thing and maybe you thought you got a good deal and maybe you didn't. Now there's no real negotiation. You know exactly what the manufacturer price is. You know exactly what the dealer bought. It's just this transaction now. And
Mhm.
that really extends to everything these days. And so when you start to think about that in the context of investing, particularly when it comes to alts, that's the interesting thing because as we start moving, from the spectrum of maybe pure equities, right? That's where you have real-time information, data, and
Mhm.
accessibility to maybe startups on the other side, where you have the least amount of data, visibility, and accessibility. That's where things like AltX really come into play, where you're doing the due diligence, you're having the reporting, you're being able to track it. That's, I think, the trend is that we're going to start to see more and more emphasis placed on trying to drive that level of visibility and accessibility to data on those more maybe opaque types of investments that are out there.
Mhm.
So,
Yeah, I
yeah,
I I think it's well said. The I don't know if I have a firm opinion on where this goes. I think, you could debate it both ways. But if you think about kind of the last is a strong word, but one of the kind of, remaining large areas where institutions have, I'll say the benefit. It's no longer about execution. It's not, can you take down a 10-year lease, in 350 Cermac, or do you have
mhm,
certain relationships? All of that is becoming, to your point, accessible and available to the average person. In alts, deals are becoming highly available, which is great. When you think about the illiquidity, though,
yeah,
the startup investing, potentially holding for 10, 12, 15 years, and in general, just overall the illiquidity premium. When we think about AltX, if you're a small investor, you may see all of the benefits and alternatives, but that's a big trade-off.
it is.
For a large institution, you want that. You want time in the market. You're able to be patient. It will be interesting, when we were thinking about AltX, is you start thinking about this efficient market. Are alternatives of an efficient market? No way, not even
Mm-mm.
close, right? And and so we don't know what that piece looks like, how efficient it becomes, kind of secondary market around acquiring secondary shares in startups, or I'm just ready to sell my kind of later stage private equity investment or whatever it may be. But we know in order to get to an efficient market, we need more data. We need this centralized place where you can say, here is the performance of these investments. So if someone wants to acquire it, easy enough. We can run the discounted cash flow models and we can look at all of that. So that will be interesting. It is sort of this last foothold, or in my sort of narrow vision around alts, this last foothold that I think institutions have, get this illiquidity premium. They're willing to wait, can.
Yeah, absolutely. Well, Zach, I know you've got 1,001 things going on, so we'll start to wrap it up here. But I did want to ask two last questions. Um, you know, you won't be the one to admit this, but I will say it on your behalf. You've been a very successful investor, and you have, I think, a level of insight and expertise that a lot of our viewers really would love to emulate. So, the last two questions would be: what advice do you have for young investors? And then, what advice would you have for more mature investors?
Sure. Yeah. Yeah. I I think it's an amazing time to be a thematic investor, to really look for these bigger themes. And what history has shown us is that it's a lot less about time in and out, timing, getting out the right time. Maybe unless you're in Dogecoin, right? But generally,
That would be now, by the way.
yeah,
Get
yes.
out now.
If you haven't done that yet, please. No, it really is more. There are some amazing themes unfolding, some things that you can look out and hopefully build enough conviction around and believe that we probably won't be drilling for oil, the way that we have been.
Mhm,
Electric vehicles are pretty dang efficient, comparatively.
mhm,
Um, these are all opinions, but decentralized finance to me makes a lot of sense. And so to a young investor, you probably have somewhat limited capital. But both in my experience as an investor and a business owner, look at the theme and be patient. Allow that thesis to play out. I've had businesses where it was really tempting to want to sell then for one sort of nuanced issue or a number of nuanced issues, but you had to kind of step back and go, thematically, the internet's growing. In our case, we believe that small businesses are going to continue to need, our services. And so being patient, time and market is, I think a much better route than trying to kind of time in and out. Um, and I just tend to, when I have something that I've landed on the right theme and it's playing out, I don't, unless I have a strong reason to get out, I don't like to get out of these kind of top quartile investments. I like to stay in and continue to ride them for a long period of time.
mhm.
So be patient, find themes. It's a great time to be focused on themes, because there are big changes happening. And I think to a mature investor, I'll kind of go back. I like a lot of people early on in crypto, I didn't quite see it, and I didn't give it the time of day. It was sort of this thing where we had these developers that were working at my company. They were buying it. I was just sort of laughing it off, going, "That's never going to be a thing." And and right, yeah, yeah, exactly. And so I think, as a mature investor, it's easy to shrug off these new things. Um, and there's a lot happening that's available. I get most of my deals now online versus a financial advisor.
Mhm.
So as a mature investor, I would also, explore these themes, but I would be open to things that are happening on online platforms. CrowdStreet introduces you to a tremendous amount of deals. So embrace fintech and the opportunities that it's bringing, because I do believe it's an awfully efficient way to find opportunity.
Perfect. I think that's great advice. Well, Zach, thank you so much. We know that you're slammed building a business, running an investment portfolio, raising a family. So thank you so much for taking the time today. And thank you, everyone, for tuning in and listening. If you haven't already, please be sure to both like and subscribe to the YouTube channel. It helps us out a ton, and you can stay up to date on everything that's going on, both with AltExchange and everything that's going on in the alternative investment space. And also, if you're listening on either Apple Podcasts or on the Google Play Store, please be sure to subscribe and leave us a review. Every review you leave helps us a ton, and it also balances out people that get angry or triggered by our conversation about Dogecoin. So we really appreciate it, and we can't wait to hear from you and tune in next time. Thanks so much.